Trading Desk, Dog Days of Summer, August 3rd edition. Guys, it is. I mean, it's, again, not to beat a dead horse, but we're kind of stuck in a broadening top or hovering near the top of at least the recent range. So,
yeah.
Well, it's almost 10 o'clock. I finished up my work literally by 9 this morning, or 8:30.
Right.
You know, we get up early because of the West Coast hours, but I mean, unless something changes, I'm going to go home.
Yeah, and again, you've got jobs Friday, you've got, but there's just a lot of noise, and it is a lot of noise. I mean, Jesse,
I wanted to highlight
a little bit.
An analyst rating. I mean, analysts, you know, it's a classic thing. They get their ratings, you know, they almost, you know, put a buy rating on things right at the top and a sell rating right at the bottom.
Yeah.
Well, one example was Variant Semiconductor. Jeff Matthews brought this up on his blog. Jeff Matthews is not making this up. Is the name of his blog. It's a great blog, one of my favorites. And analysts, you know, put a underweight, basically a sell rating on Variant Semiconductor when it was $16 a share back in March. The thing just hit 30 on buyout news, and they go to equal weight, right at 30. And the buyout is at $31 a share. So there's another dollar to be made there. So I think you ought to allocate some more funds.
In pre-market this morning, Goldman came out with a strong buy on 3M. Yeah. Now that autos are returning to the marketplace, and you know the 4,500 coupon is out there. So again, that stock was already at year highs.
And, you know, I wouldn't be a bit surprised if Goldman was buying 3M 6 months ago.
Oh,
now they're just on the offer.
Let's put a buy rating out so we can dump some stock. Hey, you never know.
But that would be illegal.
But there's a Chinese wall, so
yeah.
So. But anyways, I mean, we are getting to that point again. You've got oil today ramping up another 10% the last 4 or 5 trading sessions. Yeah.
Gold's up big.
Gold's up big.
Dollar fell again hammered on Friday. Yeah. Although I think the dollar move on Friday, I think that was a lot of month-end lack of liquidity, but did follow through lower. But I think Jesse, you and I agree. I think you got to be.
I'm starting to look at it, and I'm almost ready to get short the euro. I think that's a trade that I think is about time to put on.
Agree.
Right, I agree.
That's pretty much the reason I say it is because we all own dollars. It's our homeland currency, so we can't go commit money to dollars, so to speak. If you're bullish on the dollar, you got to figure out what to short. And we were talking about you can short a basket of currencies against the dollar. I think the euro in general.
The euro is the cleanest way to play it,
right?
Because the correlation is almost 1 for 1. So
and even in the, I think the dollar index, it's by far the largest weight in that basket of currencies.
Switching gears, let's talk again about old media, since we're kind of on this old media here on television. CNBC's out there kind of flailing around with their ratings.
I think we're stealing viewers. I think that's what it comes down to.
It could be. This is more cutting edge.
Well, I mean, seriously, CNBC is down year over year 28%, even though the market has rallied back 50% now. We're 50% from the bottom.
Everything I was reading online about it,
$9.99.
the things that all of us have been talking about for the last 2-3 years, we get tired of the cheerleading, tired of the nonsense analysis or lack of analysis. I think other people are finally going, this is horrible.
Yeah.
Right. There's no objective analysis.
Well, and Jon Stewart on The Daily Show made a great point of just hammering Jim Cramer, saying you guys had a duty to provide some investigative journalism and look into this stuff, and you guys were cheerleading the whole way.
Right.
The whole way through all of this, fraud and everything. CNBC was cheerleading and wearing the Dow 13,000 hats, and that sort of thing. And they had an obligation as journalists to dig a little deeper than that.
Right.
And so I think that's people get a little disillusioned because CNBC helped them lose a bunch of money, basically.
Yeah. Well, you could also tie it back to what you and Dan were talking about in the interview. There's other places now to get your investment information. You don't need to have it from a talking head. You can go to a blog.
Well, that's why I think the rise of financial TV is failing because again of
it's had a great run.
It had a great run, but also they took advantage of the situation when they could. But now it's the same, as you said, regurgitation of the same types of things, and it's not a good thing to be bullish all the time. You have to have both sides. Just like I
think that's why we came up with the idea for this show, is to offer a counterbalance or a counterattack to
what some people call bubble vision.
Yeah. Right.
CNBC.
Yeah. And there's a reason why. Even people like Suze Orman, her show's off 47%. Sure. Kudlow's off 48%. The only one that's not off, I think the average is about 28, but I think Cramer's still only off 10%, so he's still their best entity on that entire show.
Even though all of his recommendations, underperform the market.
He's just got that.
Well, there's 6,000 stocks. He's probably recommended every one of them 2 or 3 times.
Maybe we ought to roll up our sleeves and start chucking stuff around the studio. So,
on that note, we're going to take a break. When we come back to the trading desk, we've got an interview with Dan Hoban of G5 Search Marketing.